Guys, welcome to the first episode of the Forex Freakap. Pretty much, guys, we're trying a new format of video here because we want to provide as much value to you as we possibly can. And we did really enjoy doing those short form videos that we've been doing before, but we thought that, you know, on YouTube, people actually really enjoy longer videos, like the podcast that we do every week. People, like, it's our most popular video, to be honest. So we decided what we're going to do. Obviously, you guys have already seen Ken's Monday Money Madness. He's going to do that every single Monday, as is in the name. And then me and Ken are also going to be doing these kind of market wraps, or these Forex Freakaps, that's what we're going to call them. And we're going to do them pretty much Tuesday to Friday, so every day during the week. And in this video today, and in all these Freakaps going forward, I'm going to be pretty much talking about all of the major fundamental themes that have been moving, not just FX markets, although we will focus mainly on FX markets, but markets more broadly. So let's get started. So just so you know the format of how I'm going to be doing these videos, the first thing I always like to talk about is risk appetite, because risk appetite affects everything. Okay, it affects stocks, affects bonds, commodities, it affects all of the FX market as well. So you have to keep on top of the major themes that drive risk appetite, be that, you know, central banks like the Fed, ECB, US-China trade tensions, or coronavirus cases, or, you know, all these global macro themes, because these themes are the most important because they move everything. And we're going to see that as we go through the video today, and you're going to see that more and more as you get used to these videos. So yeah, let's get started. Let's have a look at this screen that I've got up here. So pretty much this is one of my like macro screens. So I've got stocks here in the top left, well, on the top row actually, with US equities over here. You can see where my mouse is. European equities here. And what are we seeing today in equity markets? Well, it's been choppy. My favorite one to look at is the S&P 500 in the US, top 500 US companies. So we started off this big red candle, that was overnight. So we've started off quite a risk-off morning. However, if you actually look, S&P 500 seems to have found resistance at this trend line. We've actually been coming back, and now on the day, you can pretty much see that the S&P 500 is flat. So yeah, just choppy is the way you describe risk appetite today. It's not just in equity markets. Let's have a look at bond markets here. So this is US 10-year bonds, German bunds, both choppy, indecisive. Crude oil over here, similar to equity markets, up and down, up and down. So why have we been up and down? Well, to be honest, the reason why we bounced back in the last couple of hours, like you can see, you know, in all of these charts, I don't really know. There wasn't really, like, fundamentally speaking, I didn't see any news really to speak of. But in terms of the downside that we saw overnight, there is an explanation that I've got. Bear with me 1 second. Yeah, so basically, our members would know this because yesterday we were reporting about how Chinese press, which is all controlled by the Chinese government, they were publishing all these front page articles basically encouraging investors to buy stocks. They were pumping the stock market. So yesterday we saw massive outperformance in Chinese equities, and that dragged everything higher. US equities, European equities, all risk assets got dragged higher with it. But it appears that these Chinese news outlets actually were quite alarmed by how, like, exuberant the market reaction was to their you know, articles that they were putting out. So overnight they were actually sort of backtracking a little bit. They were urging caution. They were urging investors to be rational, as if to say, hold on a minute, that massive rally we saw in Chinese equities yesterday and global equities was a little bit crazy. Just be careful, guys. So when they when Chinese papers started reporting on this topic, we have seen downside. So that's the major reason for the downside. But as I said, listen, guys, not really seeing any fundamentals to explain the reason why we did reverse, and markets can be like that. You don't always know why things move how they move. Now, I'm talking about stock markets, bond markets, crude oil markets, but how does this all affect FX markets? Well, let's switch over to my FX market screen. with just the most important dollar majors. As you all know, or you should know by now, USD, the US dollar, is seen as a safe haven asset. So as we saw that overnight risk off, if you look at this chart in the top left, that's my Dixie dollar index chart. You can see that the Dixie picked up from overnight lows of 96.60 and went to about, what's that, 97.15. That was during all that risk off, following the Chinese papers walking back and telling investors to be more rational. But then we turned around, and Dixie right now, to be fair, let me just check on the day, Dixie's flat, yeah. But yeah, really, dollar has been moving as a function of risk appetite, and this is why I say really important to always stay on top of what is risk appetite doing and saying, because that moves FX markets. Let's crack on then. Euro's been a bit of an underperformer today. If you look at that Euro chart, you can see that if you were to flip it over, it actually look a lot like the Dixie chart. So you could argue Euro has just been trading as a function of the dollar. But it hasn't managed to fully come back to being flat, still a little bit lower. And there were a couple of Euro negative fundamentals that we were talking about today. So, for example, in the morning we had German industrial output. That was a little bit softer than expected. Then also in the morning we had European Commission economic forecasts, like the updated ones that they release every summer. And it was quite a bad downbeat tone. So they downgraded their forecast for the recovery in 2020 and in 2021 after coronavirus, and the main reason for that is they were saying that the European economies haven't reopened quite as swiftly as they thought. So these combined factors probably weighing a little bit on Euro today. Let's continue to crack on. Looking at yen. Yen's been a bit of a weird one today, to be honest, because yen, like dollar and like the Swiss franc, which we'll get onto in a minute, usually considered like a safe haven asset, but yen is softer today, and to be honest, not really sure why, because usually in a risk on environment, like I say, it should do well. There was some bad Japanese data overnight. It was kind of like, not retail sales data, it's called all household sales data. It was like the largest year-on-year rate of decline ever since records began. And bad Japanese data can weigh on JPY, so that could be it. Let's move on. Yeah, like I said, Swiss franc, also a safe haven, has been behaving like a safe haven today. I don't usually have a chart for Swiss franc though, because, well, just don't. It's not as important as stuff like the dollar and the yen. Moving on further, let's talk about CAD. Now, this is another one. As well as yen, CAD has been perplexing me quite a lot, actually, to be fair, because it's not performed well in the last couple of weeks. And there's only really one fundamental thing that I can pinpoint that could be causing all this CAD underperformance, and that is trade tensions with the US, because the US have been threatening putting potential tariffs on their aluminium and steel exports. But other than that, the fundamentals haven't really seemed too bad for CAD, so I'm not really sure what's going on there. Next, let's talk about AUD and NZD, also known as the antipodes. I've got them both here, this chart here and this one here that I just clicked on. Choppy as well today, just like equities, basically taking their cue from sentiment. So AUD and NZD, just note they're both seen as risk sensitive, so they're risk assets. When I say risk assets, I mean stocks, crude oil, AUD, NZD. And Aussie, it's interesting because Aussie's actually now flat, but there are two things. If you read the blog that I put below this video, there are two things that I think should be weighing on Aussie that obviously aren't weighing as much as I thought they would. First one is this outbreak in Victoria, one of the Australian states. It's starting to get bad. Talking about lockdowns. Melbourne, 6-week lockdown apparently. The other thing, we had the RBA last night, and quite disappointingly, bit of a snooze fest to be honest. They didn't talk about AUD strength, which if you check out my blog yesterday, everyone was hoping would be like the big thing in the meeting. But they did have a slightly dovish tone, and the main reason why is because they noted the risks of this second wave. NZD, not really had any NZD fundamentals today, to be honest, just trading as a function of risk appetite, just like AUD. Now, last but not least, this is the outperformer of the day, GBP. Don't know why I left last to least, but yeah. Anyway, GBP doing really, really well today. Look at this chart. consolidating for the last couple of days, all of the end of last week, and since this morning when we hit lows of 124.60s, we've just shot higher, more than 120 pips higher from those lows. Why? Well, the main thing that I can see that could be driving this optimism is Brexit or EU-UK negotiations. Apparently, let me just read this. According to the Telegraph, EU Brexit negotiator Barnier said the EU is willing to accept something called zonal attachments for UK fisheries after the transition period ends. Zonal attachments have been a key UK request in the ongoing negotiations. Basically, don't get too bogged down with the details about what zonal attachments are, to be honest. What matters is the probability of a no deal at the end of the year rising or is it decreasing? And when you see something like the EU making a compromise on a key UK request, that shows that, you know, there's constructive moves happening in the talks. We're moving towards a deal, hopefully. And obviously when the probability of getting a deal goes up, you see that in GBP, and that is what we are seeing today. Guys, really hope you enjoyed that first episode of the Forex Freakap. I'm going to be doing these pretty much every day. Please, if you do have any questions, just stick them in the comments below if you're watching on YouTube, or, you know, just hit us up in general. That's pretty much it from me for now, and I'll see you in the next one.